Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news that dairy prices stabilised in the overnight auction. For the sixth straight time since mid-December, dairy prices have risen at the Fonterra auction. But this time they're only up marginally, with a gain of just 1.1% overall. Good rises were recorded for skim milk powder, butter and cheese, but the high-volume whole milk powder saw a slight fall of 1%. As has been signalled many months ago, volumes offered and sold were light, 22,000 tonnes, and that was the lowest since May 2013, although right near the top of the range that was offered last night. In New Zealand dollar terms, the overall rise was just 0.4% on a rising Kiwi dollar. These results consolidate the market turn higher, but more double-digit rises, especially for whole milk powder, are needed to lock in the $4.70 payout price or have any chance of raising it. And late yesterday afternoon, the Reserve Bank of Australia surprised many in the markets by holding the cash rate at 2.25%. This saw the Aussie dollar surge higher and their share market take a hit. The RBA did say more rate cuts, or in their language, further easing, is still on the cards, maybe as early as next month. In China, the China Three Gorges Corporation, the operator of the world's largest hydroelectric power project, is joining a line of state-run Chinese companies looking to issue bonds overseas for the first time. This may be part of a new and very large surge in bond supply, which could soak up significant amounts of global liquidity and, together with the US Fed's planned rate rises, start to push up global bond yields. It can be very tough being a central bank in Europe, outside the Eurozone, but Denmark's central bank had to intervene massively in currency markets last month to keep their currency, the krona, from strengthening too much against the euro and damaging their economy. It spent $33 billion in 1 month, and needed to in response to the ECB's stimulus plan. No doubt more will be needed. The loss risks there are very high indeed. In England, the boss of their central bank today revealed that he has fired his chief currency trader for multiple breaches of internal policies, and not because he failed to flag potential misconduct in the currency markets as had been previously reported. They got rid of him for sharing an internal Bank of England document with market participants, offering personal opinions about bank policy, using bad language, and sending emails with inappropriate attachments. Cavalier behaviour is apparently not only common in the markets, but in the regulators as well, and at senior levels. US Treasury 10-year yields recorded another healthy rise in New York early today, and now at 2.09% as markets accept the Fed's now consistent message that it will raise rates in a few months. The crude oil price rose to just over $51 a barrel, and the Brent crude price has risen to just over $61 a barrel. Renewed fighting in Libya was behind the slight rises. The gold price, however, fell again and is now at $1,202 an ounce. New Zealand dollar starts today higher at 75.7 US cents, 96.5 Aussie cents, and the TWI is back to 79.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.